Good afternoon, and thank you for joining us for an MP webinar covering payroll compliance, Unpacking 2023 updates. I'm Katie Kreider, Marketing Specialist here at MP. For those of you joining us on a webinar for the first time, MP is a full-service human capital management company. We offer a complete suite of products and services to support organizations through the entire employee lifecycle, including recruiting, HR, payroll, benefits administration, time and attendance, and compliance assistance. We support our clients with cutting-edge technical solutions, as well as proactive, reliable service and a deep HR and payroll expertise. At MP, we are wired for HR, and we help our clients succeed by aligning their people strategy with their business goals. I'm excited to introduce your presenter for today's program, Paul Carelis. Paul has over a decade of experience in the HR consulting space. Working with businesses of all shapes and sizes, Paul leads a team of SHRM-certified HR professionals at MP. Together, they assist clients with compliance, training, and HR guidance and support for the full employee life cycle. Paul also spearheads MP's employee retention tax credit services. This initiative has helped thousands of clients claim over $100 million in refundable advanceable tax credits. Just a few housekeeping issues before we get started here today. If you would like to submit a question during the program, please use the Q&A feature at the bottom of the screen. While we hope, and as a legal disclaimer, this training is intended for educational and informational purposes. While we hope you learn a lot today, this information should not be construed as legal advice. We will be sending out the recording of the webinar later today, along with the slides. And with that, I'm going to hand the mic off to Paul.
Thank you so much, Katie. Pleasure to speak with all of you today. While payroll, I think it's safe to say isn't oftentimes thought of as a fun or always exciting topic, it's super, super important. It's got that unenviable position of being something that most people, or at least most workers, take for granted until something goes wrong. When that does occur, it can cause all kinds of chaos, morale issues, retention issues, not to mention failure to comply with applicable state or federal wage and hour laws can cost you big bucks as a business as well. So just want to cover some of the most important aspects of payroll and payroll compliance today. So in terms of what we'll go over some of the statistics, both from the Department of Labor as well as via private litigation and class action lawsuits, to kind of see in the last year, what payroll mistakes and errors and failure to comply has cost businesses. We'll cover what I view as the 5 most common payroll pitfalls that employers fall victim to. We'll also talk about, should you be subject to an audit, both how to prepare for that and also what auditors tend to look for. We've unfortunately been involved with some payroll audits for clients and assisted them with that and sat in and spoke with some auditors. So we have a fairly good understanding of what they tend to look for and look at, and we'll be happy to share our insights there. We'll also talk about some upcoming and new regulations that are in place that could affect your business now or in the near future. We'll also give some tips in terms of what to look for when it comes to a software solution to make sure you're on top of compliance and really optimizing technology to help make your life easier. And as always, we will close with a Q&A in case you have any questions that we might be able to help with. So let's get right into it. So when it comes to the cost of payroll errors, we do have some hard and fast numbers there. So the Department of Labor in fiscal year 2021 awarded a total of $230 million in back wages to employees. That was across 190,000 workers. On average, the average amount that was paid in back wages to an employee was over $1,000. Overall, there were nearly 25,000 compliance actions, which mean audits, investigations, inquiries, looking into potential issues and wage and hour violations. The Department of Labor also tracks back wages paid by industry. So these are the top 5 industries in terms of instances where the Department of Labor found that there were owed wages to employees. So within the healthcare industry, the total in fiscal year 2021 was $13.8 million in back wages. Construction was $36 million. That was number one. Closely behind construction was food service, which was $34.7 million. Agriculture was $8.4 million, and retail was $13.4 million. In terms of newer initiatives, the Department of Labor is really doing some targeted focus and targeted investigation and outreach. They consider most or all of these industries to be vulnerable employee populations, just because sometimes it'd be low wage workers or a high propensity of workers that English is a second language or don't speak English. So other factors that make them potentially vulnerable in crucial industries with vulnerable employee populations. So they have taken special concern to look into those potential issues and make sure that those employees are being compensated correctly. Speaking a little bit further about department outreach, last year, the Department of Labor held 4,700 outreach events, many of those in Spanish, to reach those non-English speaking communities. They hosted over 70 listening sessions just to get some ideas from the general public in terms of potential areas of wage and hour violations, ideas for new regulations, opinions on current regulations, and classifications as well. And between these events, there were over 179,000 participants. So they're definitely getting out there. The Department of Labor of old was really just kind of there if you needed them. Took a long time to respond to things. Really a victim of bureaucracy in some ways, but they've invested a lot in being more proactive with their actions. So as you see here, a lot more proactive outreach, trying to get to the public, a lot more, frankly, in just advertising and getting out there. They've also invested in technological tools, so making it easier for employees to report potential violations, ways for employees to keep track of their hours on their own, things like that. So just a lot more. The Department of Labor is a lot more accessible, I'd say, than in years past, and also quicker to respond when a complaint is levied in some cases. Obviously, it is still a large agency, so the speed to respond is in the eye of the beholder a little bit, but definitely quicker turnaround time than in some years past. And then earlier this year, back in January or February of 2022, Department of Labor has made several announcements in the early months of 2022 about initiatives stating that they will be increasing audits and inspections for compliance. Some of those are industry-based. Again, some of those are based on employee populations and geographic locations as well. So outside of Department of Labor cases and rulings and orders for back pay and penalties and all of that stuff, we're also seeing a ton of private litigation. So workers essentially circumventing the governmental protection agencies and instead going directly to an attorney and filing a private lawsuit. What happens oftentimes with wage and hour, especially if it's an employer who wasn't calculating overtime correctly, or wasn't paying employees overtime, or was paying people under the table, or not paying for all hours work, things like that. What will happen a lot of times is this is rarely an isolated incident where it's just one employee who's not being paid correctly. So in most cases, they'll look to see if they can get it certified as a class action lawsuit and have multiple plaintiffs as part of the class to get a larger settlement in play. So in 2021, we saw the largest or highest dollar total of workplace class action settlements ever, and by a large margin. So in 2021, the total class action settlement amount for workplace violations was $3.62 billion, billion with a B. And as you can see, that's more than 2020 and 2019 combined. So just a huge jump. Then also when it comes to the certification rate, so when a plaintiff's attorney wishes to make a case of class action, they have to present their findings and the facts of the case to the courts and have it certified and allowed to be a class action. And that rate is also very high. So 81% of the cases brought forth to meet the bar of a class action were approved. So just again, something to be mindful of. We don't want to scare anyone. We just want to make sure that people are giving payroll and payroll compliance and wage and hour compliance the attention it really deserves, because it can be quite costly if you don't. So let's talk about some of the most common payroll pitfalls that we find in working with businesses and trying to help them do things the right way. Number one, I would have to say, are overtime calculations, and these can be really tricky. A lot of times, violations when it comes to overtime, or at least the ones that I've seen in recent years, have not been willful or malicious violations where they say, we don't believe in overtime, no one's going to get time and a half no matter how much they work, so on and so forth. A lot of times it's honestly just a miscalculation or a misunderstanding of the rules, but nonetheless those are considered violations. And sometimes penalties are up to the specific auditor or the agency to determine what's an honest mistake versus what was either a willful misconduct or a case where an employer should have known better. But let's talk about this in some length and talk about some specific scenarios that often trip up employers. So the first thing to keep in mind is that for non-exempt workers, overtime is triggered when there are over 40 hours worked in a work week. So for those of you who pay bi-weekly, semi-monthly, things like that, you don't have that entire 2-week period to play with. If someone works more than 40 hours in a work week, even if you're cut their schedule down the following week, they still should be receiving overtime compensation for that week where more than 40 hours were worked. So that's one important thing that we see as a common misconception. I'd say the other big one is really understanding the regular rate, or what the overtime rate should be. It's important, if you look over any Fair Labor Standards Act documentation, if you look over any of the fact sheets from the Department of Labor, or any of the overtime rules and regulations, or any of the modifications to those, you're always going to see regular rate as the term. We've got it in all caps there for a reason, because it's really important to note that overtime isn't necessarily just time and a half of their $15 an hour hourly wage. There are other things that may need to be factored in when determining the time and a half. So regular rate consists of most forms of compensation. So that would be all wages, all the hourly pay, any commissions that are received, any non-discretionary bonuses. So what we mean by that are bonuses that are defined and specific based on some sort of factor. So that could be a performance bonus. You get a performance for performing well in your job. A sales, if you hit a certain sales achievement or ascertain a certain quota or above and beyond number, then there's a bonus tied to that. That would generally have to be included in a regular rate calculation. An attendance bonus, so if you don't miss any time from work, if you don't call out sick any days, you get an attendance bonus. That would be included in a regular rate. A safety bonus, so you see this in some blue collar industries or manufacturing, where if there are no safety incidents in a certain time period, then eligible employees will receive a safety bonus. That would have to be included in the regular rate as well. Now these obviously get tricky, because a lot of times these will the calculation and the amount of these payments will go beyond the work week in hand. So there can sometimes be some complicated math in figuring out what the actual regular rate is, but it is worth the time and effort to take a look at and make sure you have a clear understanding and a definitive calculation, and that you're documenting it. Should you be audited and the auditor asks, how did you come up with this overtime rate? You can tell them specifically when it went into it and how. So there are some things that can be excluded from the regular rate. Some of those include gifts. So if you give someone a birthday gift or a Christmas or winter holiday gift, something like that. You also don't have to count leave, so vacation time, holiday time, sick time. You don't have to. You want to check your policies and make sure they're worded correctly so that you don't step in it by accident, but generally overtime is for actual hours worked, not for paid time not worked. There are also some discretionary bonuses that can be excluded, so really it's important to understand the difference between discretionary and non-discretionary. A discretionary bonus might just be, hey, the manager is in a good mood, so we're going to give everybody X amount of dollars. There's no real plan behind it or announcement or certain measures that have to be met to be doing it. It was just a kind of a just because bonus, or otherwise discretionary, that it wasn't guaranteed in some way if people did a certain thing. Reporting pay. So, in some states there's a minimum amount of pay that has to be given to an employee if they report to work, even if they don't work that entire time. The reporting pay piece of it generally is excludable from the regular rate. Profit sharing payments can generally be excluded, and then tips. I do have an asterisk there because tipped overtime is its own animal. We're going to get into that in a moment. But as a rule, the dollar amount of the tips generally don't count towards the regular rate. One other piece here is that generally if you have someone who's working multiple rates, let's say let's say you're a country club and you have someone who's working at the cash register at a certain hourly rate, then they work in the restaurant at a different hourly rate, and then they caddy at a different hourly rate. It's what's called a blended rate or a weighted average when they work overtime, where you have to factor in how many hours were worked at each of the rates to come up with the correct overtime. Again, a sticky calculation, and it's tough to explain in a webinar, but if you do have questions on that, or if you do have concerns about that you may not be paying overtime correctly with a blended rate or when it comes to the regular rate, please reach out to us. We'd be happy to help consult you on that. So tipped overtime, and first, one big disclaimer here, and you'll see this in underlined and asterisked on the bottom there. Tipped overtime rules can vary greatly state by state. Where I'm sitting in Massachusetts, they used to have a really, really onerous tipped overtime calculation rule where you'd have to go back retroactively and amend the original 40 hours and then not reflect a tip credit for other time, and it was really a beast. They have simplified it some, but it is still somewhat complex. So you want to be mindful and understand both what the federal tipped overtime calculation should be, and then if there's anything different when it comes to the state where the work is being performed. So here's, at the most basic level, how tipped overtime would be calculated. And this is for a situation in the state where they follow the federal minimum wage, $7.25, the federal tipped minimum wage, which is $2.13, and what it would look like. So there is the way that the $2.13 tipped minimum wages is figured is there's a $5.12 tip credit allowed to employers. So if you take $7.25, which is the federal minimum wage, times time and a half, you get $10.87 an hour. Like you are with the first 40 hours of work, you're allowed to subtract that $5.12 tip credit from that amount as well. So you end up with a $5.75 wage rate for overtime hours. So that would be rather than the $2.13, it would be the $5.75 for those hours over 40. Another overtime calculation that sometimes people will hear about or consider or want to take advantage of is what's called the fluctuating work week. It sounds really great and really advantageous. You just have to be very sure you're meeting all the requirements and that you're calculating it correctly. So let's talk about this for a moment. The fluctuating work week is popular because what it ends up doing is allowing you to pay overtime hours at 0.5 time. And we'll talk about how this works. So the first two bullet points here are the most important to potentially qualify for a fluctuating work week. First, the worker that you're trying to do this for must have a truly fluctuating work schedule. So they can't have a standard scheduled, 40 hours per week and regularly work those, and then every great once in a while, rarely go beyond that. There need to be examples of them working more than 40 hours and fewer than 40 hours on a fairly consistent basis. Again, you'll want to talk to a professional on a case-by-case basis to see whether or not you have a fluctuating work week schedule situation or not. You also have to have a mutually agreed upon salary floor. So this would be kind of a salaried non-exempt position where you say, hey, yes, you're an hourly employee, you're non-exempt, but we are going to pay you the same salary every week. Whether or not you work less than 40 hours or more than 40 hours, there will be an overtime calculation that we'll talk about, but there is a consistent salary that you're going to be paid. And we're going to go over an example on the next slide so this makes a little bit more sense. The rate for the fluctuating work week is determined by that salary and any other regular rate considerations that need to be included, and then you divide it by the total hours worked in that work week. And then you pay 0.5 of that rate for any hours over 40. So let's take a look at an example here. So in our example, we have an employee who truly has a fluctuating work week. Sometimes they work more than 40 hours, sometimes they work less. But we pay them a $600 salary every week. In the week that we're taking a look at, this worker works 46 hours. So what we would do in this example, and let's just assume there isn't any other pay or compensation that would add to that regular rate, we take the $600 salary and divide it by the number of hours worked in that week. So in this example, we're dividing 600 by 46. That gives us a rate for this week of $13.04 an hour. We then take that in half, which gives us $6.52, and then pay that $6.52 rate for all of the overtime hours. So in this case, 6 overtime hours times $6.52 creates a fluctuating work week overtime payment of $39.13. So the total pay for the employee in this example would be $639.13. And just to reiterate, if the following week the employee only works 33 hours, they would still get that same $600. I see one question. Can you pay the overtime at the top rate instead of blended? Yes. So I can't think, and forgive me if math isn't my strong suit, but I have to imagine that there wouldn't be any way that the employee would make out worse getting paid overtime on the top rate instead of blended. So that should be safe as long as it's the highest rate. Oh, and I'm getting, yep. So got one other question asking to go over the fluctuating work week definition once more on the previous slide. So happy to do that. So a fluctuating work week would be a situation where you have an employee who's non-exempt, but you still pay them a kind of a guaranteed salary. So you tell them that regardless of how many hours you work, and you don't want to tie it to a certain number, but you say, you work here full time, we're going to pay you a salary of X number of dollars per week, whether you work fewer than 40 hours or more than 40 hours. And in the instance where you work more than 40 hours, those weeks you will receive overtime pay. And usually you'd want to include a blurb about how the fluctuating work week works, just so you can show you've done your due diligence to inform them and they know what they're agreeing to. The really important part about this, and where we consult and where sometimes people think they can do this but they really can't, is you really want to show a history of them working fewer than 40 hours and sometimes and working more, that there really isn't a very set schedule where it's very consistent, and it's a very rare occasion where the hours change. That's really the most important piece of this. All right, so number 2 on my list are meal and break periods. So a lot of times people just take these for granted, kind of allow them to take care of themselves, don't really put much thought into it. But what we've seen when we've been a part of audits is there are a lot of questions and a lot of inquiries about meal and break periods when an audit is being performed. One really important thing that a lot of employers don't realize is that any breaks that are less than 20 minutes must be paid time. You can't have someone taking an unpaid break that's less than 20 minutes. So not that it's fair to you, but you really have to be a bit of a hawk when it comes to unpaid breaks and making sure people take at least 20 minutes, even if they're hesitant to. If it's going to be an unpaid break period, you can't let those be less than 20 minutes. There have been several examples of this out there, both in DOL cases as well as lawsuits, where I know there's an extreme example where a company was making people punch out to use the restroom and things like that, which obviously is a bit extreme, but oftentimes those were less than 20 minutes. And once officials caught wind of this scheme, they quickly shut it down, and it cost that company a lot of money. Because again, anything less than 20 minutes has to be compensable time. You cannot have unpaid sub 20-minute breaks. If you do have a bona fide paid meal break period where people are relieved of their duties, but they are paid for that time and aren't performing any work, oftentimes those can be excluded from the regular rate. So again, you want to talk to an expert if you have that situation at your place of business, and make sure that all the pieces are in place to qualify you for that exclusion. One piece of advice here: whether your meal times are paid or unpaid, just make sure you document any that are required by law. So many states, most states will have a mandatory meal break law depending on how many hours are worked in a shift. So assuming you're in that, or even if you're not and you have meal break periods, just make sure you're documenting those and that those are on record. Some people in their time and attendance system opt to have automatic meal breaks applied. There's certainly a convenience factor there. Personally, I would just say, if you have automatic meal breaks being added into your system, you want to make sure someone's auditing that and ensuring that those people are actually taking those full breaks and they're not working through them or anything like that, because that can cause a lot of problems, a lot of headaches, and a lot of expense. So, if you can, I think it's great when employees themselves are putting in their meal break periods. So you've got that extra layer of protection and affirmation that they're taking the breaks, but just make sure it's documented properly. If you do have people who are wanting to waive their break periods, some states are more open to this than others, but either way, if people are waiving their meal breaks, especially in states where they're required by law, you want to make sure you have a compliant waiver in place and that the employee is signing off that they're voluntarily waiving this period, that they're not being coerced by the company, that it's completely their own decision, and they're not signing away their rights or anything like that, but they just wish to waive their meal break period. So you want to make sure you're collecting those from employees who are waiving breaks. I also advise against, some companies will want to encourage people, or just are in an industry where people tend not to want or need meal breaks. I would still have that separate from your onboarding package, because the fear is just that if it's part of the onboarding paperwork, people will take that as them being coerced, that it's expected of them to be signing that and waiving their meal break. So just be careful of that. Number 3 on our list is classification issues. So, it's important to note you can pay employees in many different ways, a variety of ways. You can have employees that you pay by the hour. You can have employees that you pay on a salary basis, even non-exempt ones like we talked about with the fluctuating work week. You can have employees that are paid a commission. You can even have employees who are paid piece rate. So sometimes you'll see this in manufacturing or other fields where, for every widget you produce, you are paid X dollars. And that's fine. The Department of Labor is okay with any of those pay structures, but there are rules. You still have to be meeting the minimum wage requirements. and you still must meet the record keeping requirements as well. So even if you're paying someone a salary basis, unless they're an exempt professional, and you're confident in that, if they're a non-exempt employee and eligible for overtime, you still need to be tracking their hours, even if they're not paid by the hour. So if you have a commission non-exempt person or a piece rate non-exempt person, you need to have documentation and paperwork showing how many hours they worked each day, how many hours they worked each week, what their pay is and what their pay rate is, as well as several other record-keeping requirements as part of the Fair Labor Standards Act. These are just the ones that are especially pertinent to payroll. So because, if you pay someone, let's say $5 per item that they manufacture, and you're expecting them to be able to produce 50 of these items in a day, but they work all day and for some reason only produce one, yeah, that's probably a disciplinary situation for you. But you need to make sure that they're being paid at least minimum wage for those hours worked. Whether or not they did a great job is one thing, but if they were working, regardless of that performance, they need to be paid at least minimum wage or whatever you've agreed upon with the worker. So no matter what your pay scheme is, you do need to be tracking those hours for any non-exempt workers. And believe me, it'll come in really handy should you ever be audited that you've got those hours, because they don't take kindly to you saying, well, we just paid them by the item, or we just paid them a salary or on commission and weren't really tracking the hours. I can tell you for certain the auditors will not like that. Okay, and one thing to note, certainly if you do have someone who is an exempt professional employee, an executive, an administrative, they meet the requirements of the administrative exemption, things like that, then if someone's truly exempt, you don't have to be tracking their hours. They do need to be paid a guaranteed salary. But we have other trainings and webinars on that topic, and there may be some changes to that as well, which we'll talk about towards the end of today's presentation. So aside from the exempt versus non-exempt classification, another really important classification to make sure you're solid with and compliant with would be whether or not you're paying people as employees or as independent contractors. So I think it's cooled a little bit, but there were certainly some times, and there still continue to be, several workers out there who are paid as an independent contractor. So those folks are paid a 1099. They don't have taxes withheld from their pay. And the point of those is really those people to be in business for themselves, truly independent contractors, not employees of yours. If they are legitimate independent contractors, they're not subject to the Fair Labor Standards Act, so you don't have to worry about overtime or record keeping or any of that stuff. The problem is people will sometimes see the ease of that. Hey, I don't have to withhold any taxes. I don't have to worry about overtime. I don't have to worry about sick leave or parental leave or paid family medical leave or any of that. I'm just going to pay people with a 1099. It'll be so easy. Unfortunately, the law doesn't work that way. Many states have their own set of rules. So again, this is another instance to make sure you're familiar in the state where the work is being performed, what their rules are. As well as what the federal regulations are in terms of who can be considered an independent contractor and who needs to be classified as an employee. And this, out of the top 3 priorities for the Department of Labor over the next couple of years, really taking a look at independent contractor classification is near the top of that list. So expect to see some changes to the rules and expectations at the federal level, perhaps matching what some of the more strict states require for someone to be considered an independent contractor. If you take a look at California, for instance, or Massachusetts, their rules for independent contractors are much more strict than the current federal standard. So keep your eyes peeled for that. Should there be any changes, we'll certainly alert everybody, and we'll definitely have a webinar on that topic as well. As a rule, again, just to keep things on the up and up, it's best if you can avoid paying an independent contractor an hourly rate. One of the functionalities of an independent contractor is their ability to realize a profit or a loss depending on how well or how quickly they're able to get the job done. So paying based on the hour will sometimes take away from that. It's not an end-all be-all black and white situation. These classifications and making sure they're coded correctly can often be complex and have a variety of factors in terms of how much control you have over the work being done, how, when, where, and why it's being done, the method of pay, the equipment being used, things like that, who controls all of that. Several factors, and we have educational content on this as well. I will say for audit purposes, if you do have independent contractors on payroll, at a bare minimum, aside from having your justification in terms of why they are correctly classified, also make sure you have a W-9 on file for them where they're providing their taxpayer ID to you, and then also whatever you have for an independent contractor agreement. And again, just having one of those agreements doesn't mean that they're legitimately an independent contractor if they don't meet the other requirements, but it's something that'll likely be asked for as part of an audit. All right, next on our list are wage garnishments. So these can come in a variety of forms. Sometimes it'll be a child support order where you need to garnish an employee's pay to pay some back child support. It can be a levy for unpaid personal taxes, for a state or the federal government. It could be student loan payments that are defaulted and need to be have wage garnishments attached to them, or any other kind of court order. So these will generally be either from a government body garnishing wages like the IRS or a state tax agency, or from a court when it comes to child support or some other civil garnishments. So these will often be sent directly to you. The employee may or may not get a copy of it, but the correspondence would be coming to you, the business, in the mail. Part of the new hire reporting process, when you hire a new employee and their information is sent to the state, that's a lot of times how these things are uncovered, and they realize, hey, this person who has a garnishment order is employed by you, and then they'll send you the letter directly as the employer. You want to make sure you review the orders carefully, or bring in an expert or a professional to take a look at it, just so you truly understand what the factors are and what the conditions are of the garnishment, when it needs to start, how much it should be for. Sometimes it's a flat dollar amount, sometimes it's a percentage of pay. You also have to take a look at the state, and the state where the employee works. Are there limits on how much their wages can be garnished? Do they have to maintain above minimum wage? Do they have to maintain a certain guaranteed amount of take-home pay each time period? So it may be that the amount you garnish is less than what the order calls for, but that's just to remain compliant with whatever state restrictions are in place. Some states will also, or some garnishments will also allow allowances for dependents of the employee. So let's say they have to take home at least $500 per week by this garnishment, and then they also get an extra $50 for each dependent that they have. So take a look for things like that on the garnishment order. You also want to see, is this an ongoing thing? Is this just child support that's going to need to be paid until you receive a notice saying otherwise, or is there a certain balance that needs to be paid off? So let's say it's a student loan and they owe $2,000. You just want to make sure that the way it's set up in your payroll, that will stop once the balance has been met. Unless it's one of these balance situations, do not change the garnishment details until you receive an official release. So sometimes what we'll see happen is an employee will come to their employer and say, hey, I made an agreement with this person or this agency. I've got a payment plan outside of payroll, so you can stop my garnishment. I stress to you, do not do that. Just let them know, hey, I get it. I need to have an official release come in the mail that frees me of the responsibility of garnishing your pay. Because at the end of the day, oftentimes the liability lies with you as the employer. And if you don't follow the garnishment order, you can potentially be penalized, and you can be held liable for the amount that the employee owes. So I'm sure the last thing you want to have to do is pay money that someone else owes. So just make sure you wait for an official release from the court or from the agency on the garnishment before you stop garnishing those wages. Number 5, taxes. So this is always been a hot issue, but it's gotten considerably hotter since the pandemic started in 2020. So the first thing you really want to ask yourself as a business are we collecting and reporting to the correct states? And this answer can vary depending on your situation. First, you want to make sure you're reporting to the correct and all applicable withholding states. So most states have a income tax. If you have employees who are performing work in multiple states, there may be an instance where you need to be withholding income tax from multiple states for that employee. So if their work week consists of some projects in New York and some projects in New Jersey and some projects in Pennsylvania, you could very well be in a situation where you need to be withholding income tax for all 3 states on behalf of that employee. So again, no two instances of this are the same. You want to take a look at the situation, talk to a seasoned HR professional or a tax expert to make sure you're doing that correctly. Unemployment tax is a little bit different. So generally speaking, unemployment is an employer tax, so it doesn't come out of the employee's pay. It's an employer tax, so it's on top of the gross pay that you pay. But it can sometimes be tricky in terms of what state you should be paying into for unemployment tax. And even when you have employees who are working in multiple states, in most or all instances, you're going to want to have one unemployment state that you're paying to. And there's a series of questions and factors that need to be asked. The Department of Labor and all the states that participate in unemployment all follow those same rules in terms of determining which state should be the unemployment state of record. What we can do is provide a document that walks through that along with the copy of the slides today. So I'll make sure that Katie gets that and sends that to all the attendees. And again, if you have questions, let us know. It can be pretty tricky when you have a multi-state employee determining which is the correct unemployment state for them. You do also want to make sure there are certain taxes such as unemployment, states that have paid family medical leave programs, and other tax agencies where the rates on those can change from year to year or sometimes quarter to quarter. So you want to make sure that if you're getting letters in the mail advising you of updated rates or new tax rates, that you're getting those to your payroll provider as soon as possible so those can be updated. The worst thing is if you miss that mail and all of a sudden you get a letter that says, hey, your rate jumped to 3%, but you've only been paying us 1%, and you owe us all these back taxes as well as interest and penalty and all that. So make sure your rates are being updated in accordance with the respective programs. As I said, remote workers have also changed the game. So you may have been someone who had an office in Texas. Everyone had been reporting to that office, and all was well and good. No income tax there, if I remember correctly. All very straightforward. All of a sudden, either due to growth or the pandemic or whatever, you had employees that moved out of state or you started hiring remotely. In many, if not all cases, you need to be worried about where the work is being performed. So even though your offices are in Texas, if you have someone who's performing all of their work from their bedroom in California, you are a California employer now because you have employees performing work in California. So you need to be registered in those states for payroll taxes. You need to be remitting payroll taxes in those states. So just be really mindful of that. It's something that some people lost sight of or didn't really think of as they were growing their business or allowing employees to move or hiring employees in other states remotely. All of a sudden, before you know it, you wake up and you are now a multi-state employer and have multi-state tax implications as well. So just do a double check of that. Make sure that you're compliant in all the states that you need to be. When it comes to audit tips for this, we do advise a lot of times auditors will ask for copies of W-4s. Those indicate how an employee wishes to have their federal income tax withholdings treated. So make sure you have a W-4 on file for each employee in the personnel file. All right, let's talk about audits. So I don't think this is anyone's favorite thing to have happen to them, and I don't blame them. Audits are not fun. I won't sugarcoat it. But if you handle it in a cooperative manner, in a calm manner, and oftentimes the bark can be worse than the bite. So There can be all different reasons for an audit. Sometimes it'll be one of those targeted campaigns from an agency that they're going to audit, dozens of restaurants in this area or that state. Oftentimes an audit will come as a result of some formal complaint. So an employee levies a complaint to the Department of Labor and say they're not being paid overtime, that they're working more than 40 hours. Sometimes rather than just looking at that one individual case, they'll assume that it's probably a more than just one employee situation and do an audit to see how big of an issue it really is. Sometimes you'll get some information about what the complaint was and it'll give you an idea for what to look for. Other times it won't, but sometimes you'll kind of be able to garner it based on the documents they request or the questions that they ask. You'll kind of get an understanding for what the complaint must have been. So in terms of areas of focus, very, very often, if not all the time, the auditors will want to have an understanding for overtime. They'll see overtime on there, or they'll see more than 40 hours somewhere, and they'll ask, how was the overtime calculated? What's factored into overtime, and all of that. So you want to make sure, again, that you have that documented somewhere in terms of what your policies are and what your procedures are for calculating overtime. You also, again, want to be mindful of federal versus state. So as I said, tipped overtime is a great example of this, where the federal and state rules might be in conflict. When that's the case, you're going to want to do whatever is more advantageous to the employee. So if a state has a more advantageous overtime for tipped employees rule or regulation, you want to be following that. And one unfortunate but interesting thing that can happen with this is if you're having an audit by the Federal Department of Labor, let's say, and they take a look at your overtime and they see that it's actually in compliance for federal, so you're not going to get dinged by them, but they happen to know that it may be out of compliance for the state, they consider themselves mandatory reporters. So I've seen it happen before where they don't ding you for any federal overtime rule violations, but all of a sudden, shortly thereafter, you get a letter in the mail from the state saying that they're going to be auditing your payroll as well. And that's because the federal DOL realized that you were a violator at the state level. So just be mindful of that. You also want to be mindful of multiple locations. So even if you have multiple IDs, if you have employees that work at several locations and they're working shifts at let's say you have 3 restaurants and the same employee works at all 3 locations, you do need to be keeping track of those hours. And if they do work more than 40, it's likely an overtime situation. So be mindful of that. As I said before, keep all your paperwork in order for any independent contractors, independent contractor agreements, W-9s, invoices, all of that kind of stuff to really make the justification that those people are in business for themselves. You also want to keep date of birth records for any employees, and then if you do employ minors, have their job description handy as well as their schedule and their time and attendance records, because another part of an aspect of the Fair Labor Standards Act are the child labor laws. So those limit what jobs children are allowed to do, as well as how late they can work on a given day, and how many hours they can work in a day and in a week. And again, this is another instance where most states will have more stringent laws, so you want to make sure you're following your state child labor laws as well if you do employ anyone under 18. Some other things that auditors take a look at, definitely those meal and break periods like we were talking about. They'll want to verify that those are being done correctly. If your records are showing any breaks that are less than 20 minutes, those will get called out pretty much immediately. They will oftentimes, if they see everyone paid a salary, they'll want to get a better understanding of what those duties are of those workers who are being paid salary, especially if they're not eligible for overtime. They'll want to make sure that they're truly exempt individuals. As part of that effort, a lot of times what we're seeing in audits more recently are that they will want to interview employees. Oftentimes it won't be that same day necessarily as they're gathering the paperwork, but it might set up some time or ask you for some names and phone numbers of different employees so that they can interview them and ask them and make sure that what you're telling them isn't in conflict with what they're hearing from the employees and what the paperwork says. They also will take advantage of any additional or information that's volunteered to them. So we'll talk about this next when we talk about the tips. So how to make the audit as smooth and painless a process as possible. First of all, definitely cooperate. Do not ignore an auditor's request to come in, or if there are any findings, do not ignore any corrective actions that they tell you to make. Please cooperate. I've seen people that did not cooperate and it did not end well for them. I can just tell you that. Do examine their request carefully. Only provide what is requested. So this goes to the volunteering information. If they're asking for the payroll records for all employees from this date to that date, only give them the payroll records for those dates. Don't round to the end of the year or the beginning of the year. That's just going to give them more to examine and more to potentially ding as a violation. If they're only looking for certain employees or certain documents, only give those documents. I know it's easy sometimes just to take all of the personnel files, especially if they're digital, and just give them a thumb drive of everything. Well, if you get an auditor who's got some time on their hands, they'll look through everything and they'll find stuff. And again, even if it doesn't pertain to their agency, maybe they'll report it to the EEOC or another governmental body. So just provide what they ask for. Do make sure you have job descriptions up to date and handy, especially to justify your exempt and non-exempt workers. Make sure you have detailed wage and time reports. So I've seen people get in trouble for having stuff handwritten or not documented. In those cases, in almost every instance, if an employee makes a claim and you don't have documentation proving otherwise, if they say, hey, I've been working 60 hours a week for the last 2 years, and you don't have any documentation that says otherwise, then oftentimes they'll take the employee at their word. So make sure you're documenting and storing those files. Again, have your personnel files handy, so if they ask for stuff, you can give it to them. But when it comes to what they're asking for, take those out of the files yourself. Don't invite them to rifle through your personnel files. Again, they could come across things that they don't need or want to see. So when it comes to software as a solution, what are some things that you should look for? Time and attendance software can be really advantageous to having compliant wage and hour practices. So you want to look for some that has a good technology for tracking breaks. Again, in this day and age, especially if you have remote workers, you want there to be easy to utilize and easy to monitor remote work options. Another hot point for audits now are remote workers and people kind of working off the clock. So you got to be very mindful of any non-exempt workers you have who are working remotely, because if they're working 80 hours a week and you should have known it because you see their production and their emails and whatever happening, that's going to be a massive overtime situation. So you want to have time and attendance software that's going to play nicely with all those situations. It's also great if you can have electronic onboarding. So having employees fill out the information, it's stored securely and accurately, and they filled it out themselves. So, they take some responsibility for the correct and accurateness of that information. You also want to make sure you have a software if you do have overtime situations, especially if they're blended rate, other complexities to your overtime, that you have a software that can handle that and come up with a computation for to make sure your overtime is being calculated correctly. It's great if you have a software that has robust employee self-service functionality, again, so that employees can't claim that there's any hurdles to them making changes or reporting things accurately, or that there are any hurdles or chilling efforts for them being able to see their pay information. When it comes to garnishments, like we talked about before, it's great if you can utilize a software that can manage those garnishments for you, reduce balances, make payments directly to the agency so you don't have to. You also want to make sure you're working with a software that has compliance for tax agencies in all 50 states, as well as new hire reporting capabilities. So when you hire someone, that information is being reported as required to those states. And depending on your industry and your software suites and what you're looking to do, it's great to have some integration options. If you're a restaurant, you use a POS system, it's great if there can be a bridge between that and your payroll software. iSolved has many solutions for that. So if you use a POS and you're looking to have an integration or a bridge, let us know. We can probably help you out with that. And then lastly, and this can come in handy both for you just managing your workplace, as well as should you have an audit, just the ability to quickly and easily run reports and also have custom reports that are easy to put together. Just so if they want a specific date range or a specific group of employees, again, you're not just sending them canned reports that have more information than they need to see. In terms of what to be on the lookout for now and in years ahead, always be mindful of minimum wage increases, and keep in mind that these aren't always necessarily on January 1st. More and more states are doing July 1st starts to minimum wage changes and things like that. So especially if you're multi-state, just make sure you're meeting the minimum wage requirements in those states. Also, if you're a federal contractor, they'll oftentimes have their own minimum wage requirements, so be mindful of that. Again, as I said before, the independent contractor rules are one of the top priorities of the Department of Labor, so be on the lookout for changes there. There is a lot of word out there that there are going to be some changes to the Fair Labor Standards Act and the salary basis test. It's likely that those rule changes will be proposed next month in October. It won't be official for quite some time after that. There'll be a public comment period and then a final rule and then an actual effective date. But keep your eyes peeled both to our webinar series and other communications from us about changes coming to the Fair Labor Standards Act from the Department of Labor. There are also changes when it comes to rules regarding tip pooling and tip sharing. This is yet again another instance where sometimes states will have their own rules about what's allowed for tip pools and tip sharing, but there are federal rules now as well that restrict and limit what owners and businesses can take from tips. The Department of Labor also recently revised the rules for what can be considered tipped work. So if you have tipped employees who are spending less than 80% of their time doing tip duties, that can affect how much of a tip credit you can take on their wages and whether or not they can actually be paid tip minimum wage versus actual minimum wage, depending on how much of their work is actually tip eligible work. So if you are in the hospitality industry, do make sure you familiarize yourself with that or speak to us about it. All right, I know we're coming up on the hour, but it looks like we do have a couple more questions. Let me see here. Let's see. If a company requires a salaried employee to work 45 to 50 hours a week, is there a minimum annual rate? So first, to answer that question correctly, you want to first determine if they're an exempt employee or a non-exempt employee. If they're exempt, then yeah, you can require them to work as many hours as you want, and they are exempt based on their job duties. You would not need to pay them overtime. The minimum pay that you would need to pay a salaried exempt worker would be $684 per week. Again, that will likely be the biggest change to the Fair Labor Standards Act when it is announced that they'll likely increase that minimum salary threshold, but as of right now, it's $684. If the employee's job duties don't qualify them as exempt, then you would be looking at an overtime pay situation there. Is it an employer's responsibility to notify employees when a federal tax form changes? So it depends. It depends on the form itself. Some, like the W-4, allows employees to just continue with what they were at before. You don't have to have a new one necessarily every year. So it really depends on the form. The W-4, I believe you're allowed to just keep as is unless an employee wants to change it. Our standard work week is 37.5 hours. Is the minimum OT still 40 hours? Yeah, so in that situation, you would only be required to pay overtime pay if they worked more than 40 hours in a week. So you'd have 2.5 hours to work with there before overtime was in play, unless your policy state otherwise, but that's up to you. clarification, the job is exempt and non-exempt, not the employee. Yeah, that's correct. So it depends on what duties the employee is performing. So it is based on the job and the essential functions of that job and what they're performing. So you do want to take a look at that for sure. If you have any questions on that, please do let us know. Looks like the other questions here are fairly specific to the company in question, so we'll be happy to reach out to you about those. But otherwise, I think we're good to go. Thank you so much for your time. I'll hand things back over to Katie to close us out.
Thank you so much, Paul. The NPHR team is here to help guide your organization on any HR compliance issue. If you would like to learn more about how we can assist your organization, please visit our website, set up a short 15-minute call. Be sure to join us later this week for our webinar on HR compliance and payroll software, reporting state and federal laws, and leaves of absence. Visit our website to register and to see the full calendar of upcoming events and available resources. We will be sending out a recording of today's webinar along with the presentation slides this afternoon. Thanks for joining us and have a terrific day.